We start off with the latest tit for tat in U.S.-China trade relations. Beijing retaliating against the latest chip export restrictions by announcing it will no longer send certain critical minerals to the U.S. CNBC's Megan Cassella's got the details on this. Megan.
Hey, Melissa, that's right. A real ratcheting up of trade tensions with this move today from China to ban the sales of these rare minerals to the U.S. effective immediately. Now, this, of course, was a response to the Biden administration's move on Monday to restrict the export of some chips and chip-making equipment and software to China in order to slow Beijing's development of advanced weaponry and AI systems being used by the military. Beijing today rejected the U.S. justification of that move, saying Washington has generalized the concept of national security in recent years and abused export control measures. Their response today represents a real significant stepping up of these tensions, not entirely unexpected, as they did begin laying the groundwork to make this move possible over the past year. But it could only be a first step, given, of course, the additional tariffs that Donald Trump is vowing to impose when he takes office. The critical minerals being targeted have broad military uses. They're used to make weapons, but they're also in a number of consumer goods, phones, computers, cars, all industries, Melissa, that could feel an impact as this trade and tech war between the U.S. and China starts to heat up. Melissa?
All right, Megan, thank you. Megan Cassella. It is of note that, these metals have not been shipped to the United States for a couple of years now. So it either indicates that companies have moved away or they've drawn down stockpiles that were built up before. But not either way, tensions are getting worse.
Well, we talked about this last night, and we talked about, I think, for the most part, for our investors right now, the question is what's the impact for U.S. companies? So when you talk about U.S. miners, no, of course, they're not on the ground in China. And yes, there's no question that probably for the last 20 years, and we've done it here. Remember the Unocal deal where the Chinese were coming in to buy? I mean, this goes all the way back in time. I wouldn't be that scared off by these headlines. I do think also the last couple administrations, including this one going back to their first one, were thinking about how do we secure rare earth and some of these important minerals on these shores. So it will lead to some squeezes here. But I think the more important dynamic is what Eunice Yoon was saying on our set yesterday. Not an as live guy.
No, she was actually here.
She was here in person, and it was great. And she reinforced the story that the Chinese are less concerned about external interpretations, or at least really, more importantly, policy as it affects the economy, when in fact they care a lot more about policy, what that means for securing power, for the Communist Party, for social control. And that's really potentially risky for U.S. companies.
Yeah, they're playing the long game, so they don't care what the near-term impacts are of that long game.
And we also mentioned the yuan at the lowest level now in a year. And look at the move since October. It's actually pretty startling how quickly it's deteriorated. And, you go back to August 11th, 2015, when they actually announced the devaluation of the yuan. And by February of the next year, our equity markets felt it, to Tim's point. So nobody's paying attention to this now. I think they should. J.P. Morgan had a note on it, as we said last night. And I think to your point and Tim's point, it's not so much what this means, because maybe it's not a big deal. It's the ratcheting up of the rhetoric that's important.